Welcome to Trading Lounge and the US indices. Look at the Nasdaq and the S&P 500 with Elliott Wave, and we're looking at still another little move higher with the Nasdaq here on the daily chart. This little correction that we've had here, we're looking for a little new high to come in place here to finish this whole structure off here. The other point with this in the bigger picture is that we're looking at wave 3 here. It's possible to have this as an A and a B and a C and a D and an E wave here for wave 4, but it's also possible to have wave 3 here with an A wave here, a B wave at this high here, and then a C wave down here. However, at the end of this particular little structure here, in one way or another, we're going to see a correction either down to wave 2 or down to wave C. So let's just investigate this particular trend within this space here. So on the intraday, on the 4-hour chart here, if we take the intermediate wave 4 here from the triangle pattern of D and E here, then we can look at this as 1 and 2 here, and 3 and 4, and then we're looking up for wave 5 here. In wave 5, we're looking at wave 1 and 2 here, and then we've got wave 3 in place here, and wave 4 here, so we can clean some of this up here. Bear with me a second. So yeah, we're on our way to, we want to make a new high above here. So we'll be looking somewhere into perhaps the 7,300 or close to that area there. But let's just go in and have a look at the intraday on the 1-hour chart from wave 4 low here. So the 1-hour chart, wave 4 here, and we're counting 5 waves up. So wave 1 and 2 is quite clear. That wave 2 could sit onto this low here as well, but from here we have 1 and 2 and 3 and 4 and 5 here for the third wave, an A and a B and a C for the fourth, up for the third here. So I'm thinking that we've got 1 and 2 and the third wave here, and we'll see a bit more of a dance across here for wave 4, and then pushing up for wave 5, making a new high here to end this. Now, will it get to this 7,300? I'm not quite sure, but once this wave 4 here finishes, we'll see that push up. So we can take this long trade scenario here and place it under wave 4 low here for this. Still, that no, it shouldn't do. I'll just bring that a little bit lower, actually. Let's just be a little bit safer at this point. Let's see what, in case this wave 4 comes back and we don't want to trigger it and then to move up, you know. So in fact, let's just leave it under here for the time being, and we can work with that later. Now, the S&P 500 will be much the same as well. So with the S&P here, we've got this particular pattern on the daily chart here where we have intermediate wave 3 here, an A wave here, and then an A and a B, and then 5 waves for the C wave here for wave C of B. And once that's complete, we're looking for a move down. But once again, we can look at this as a bullish pattern as well. We could look at this as wave 4 sitting over here with 5 waves up here as wave 1, and then an A and a B and a C coming back for wave 2. So on this next chart, that will point that out here are slightly different, this particular pattern, in that we could look at this as wave 1 here and wave 2 here, and wave 3 here moving up. It will move up higher. Now, in both cases, we don't really have to do much. In this case here, once it hits the 2,800, this is a minor trading level here in the trading levels concept, and it's very important. We see number 8 as a profit taking number. So what we'll do here is going to be really quite simple, because once this wave finishes up here, let's just go, so with those two counts in mind, one bullish, one bearish, then the 2,800 becomes a real line in the sand. So we can look at it in terms of, I'll just go to the hourly chart here. So with the hourly chart here, we're looking at 1 and 2 and 3 and 4. and then going up into wave 5 here. Okay, so we can also take this here and we can put that under this low here. So if that's breach, we need to be on the short side. Don't overtrade, but a small position there, and then we'll work out what we've got and how we're going to approach it. But that would be it on the short side there. This move across here appears to be corrective with overlapping wave structures, so we should see this move higher here. Now, the thing that I wanted to talk about was really the what happens at this particular level here. So the normal thing here, we know now that all this consolidation here will act as a good support. Okay, so we can consider a move up into the 2.8 here, and then we could look at a reaction from here. If we get a reaction from here, it's going to find support at this level here, and then it can push up here. If it pushes up through here, that will give us our first high above the level, and then we'll be looking at some type of correctional pattern with still support here. And in that case, this is called the classic trading levels pattern: the arrival, the reaction, the first high above the level, then an ABC correction. So we'll have our first entry above here, and if we get a second high, well, then we'll play it out here. So no matter what happens, if the market moves up this way through here, we're going to be long through there. We'll take that. Okay, but otherwise, if that's not the case, then we need to be looking at the short trades, you know, on the lower end here, and that's what we'll do. So yeah, let's give it another couple of sessions to finish off here. But in the meantime, if that's breached here, then we need to be on the short side from there. But otherwise, we'll expect to move up here. We won't be calling any trades in sort of in this little area here until we've got a pattern that's matured, because even though we pretty much know what's going to occur here in terms of a pattern, we don't want to just jump in early and get triggered out, because there will be heavy retracements, you know, within this particular within this space here. The Amazon, that's also been helping drive this as well, is doing much the same thing as well. I've got a bit more of a bullish count here, as you know, so this is an hourly chart all squashed up. So we've got 1 and 2 here, then 1 and 2 and 3, and across here for 4. And even though it's a little bit tricky to navigate up here, we're looking at 1 and 2, a nice third wave and a fourth wave to pull back to 38.2% retracement level. And then we're looking for one more high here. So I'll just clean this up a little bit here. So it's done all the right things here so far. I'll just get this into perspective here. So we're looking at this coming up. 720 was the target, so between 1720 and 1730 we're looking for this particular high to come in play here. So we're looking at yeah, one more little move up through here. But I suppose once again too, we can prepare for the short side. So under this little level here would be your stop, and we can also look now at that being a short trade setup there as well. So this one's still got wave 3 to go here, and then a wave 4 to play out here as well. So this is a little bit different from the S&P 500. I'll just go to the tick chart and just double check on a few things here. So yeah, pretty much sort of on track. So we were looking at coming back to the 38.2% retracement level. We can move this up into, we could move it up into here, but I'll just leave it here for the time being. So that can be our entry on our short side so far, but or a stop, it doesn't matter. But yes, we're looking, this is the A wave, the B wave, and 1 and 2 and 3 and 4 and 5 down here for this. We know wave 4s can get complicated, so we may end up getting a flat correction within this space here as well. But this has been one of the main drivers, this market, so we need to yeah, just keep a bit of an eye on it as such here. And of course it's at the 1700 here, so no point in going long here now unless this becomes the support. So once again, you'll need to look for the classic trading levels pattern. This is an overshoot pattern here, so for the distance it goes above will be the distance that comes back in its first swing. So in this case here, we would need to see, if I could draw over here, would need to see the arrival, the reaction, the first high above the level, which is done, and then not first high above the level, but the reaction's done, and then back down, and then support here. So if you're going to go long, that's how you do it over here. So the arrival, the reaction, the first high above the level, a little correction, and then use that support back on over there. And then you just bring the entries down from this high to this high to this high, which would be sort of over here in a smaller version. And that way you don't get, if it's going to trigger to go higher, then, because the market's got it's just a little tactic, and it's good, rather than just getting straight in, it's good to have a situation or a tactic that, the market's got to prove to you that it is strong. It needs to take out a new high. It needs to clear out the supply, clear out the sellers, and move higher, and and prove it to you. And that's it's just a safer, very simple but safe way to move into a market just in a safe way, I guess. So yeah, there you go. All right. Well, look, thanks for tuning in. Much appreciated. Cheers.